You're watching Hot Stocks right here on ET Now, and N. Sivaraman, who is the President and Whole-Time Director, L&T Finance Holdings, joins us on the show right now to talk about the business outlook. Mr. Sivaraman, thanks very much for taking out the time. Expectations from the budget are riding high. What are your specific, expectations stepping into the event, and also in terms of, reforms as far as the infrastructure sector is concerned?
Well, the most important point is to get resources for making investment in the infrastructure sector. As we have seen, the last 2 years have been extremely low level of investment. Even the awarded projects have not really made progress thanks to various issues. The previous government has done some work around clearing it, providing clearance through the Cabinet Committee on Investment, but they have got stuck in various bureaucratic issues. So this is a piece where we would like to see the government really taking steps. What perhaps the government will have to do really is not necessarily dependent on a PPP model, but work around to provide resources from the budget to give it a kickstart really to go forward. The second piece, in my view, will be around the taxation side, how they can improve the multiple taxes, avoid all these education etc., so that the corporates do have larger resources left with them to reinvest in business and build capacities as well. We would like to definitely see the statements around inflation control get converted into specific steps about capacity creation, how to sustain the agricultural output. Can there be something around the market mechanism on the food prices? These are something which will be interesting for us to see in the budget.
Outlook on overall credit book growth, Mr. Sivaraman. What's the kind of credit growth that we can expect both in your retail finance business and the wholesale finance business?
Sure, we have seen growth as an outcome rather than as a objective. Having said that, I would guess that there is enough opportunity to grow our balance sheet by about between 15 to 20% in the current fiscal year. Thankfully, the new government, the positive statements as well as conduct of the government at the moment, with the fillip from budget, should help us realize this goal of growth in the balance sheet.
Overall, how do you see margins and asset quality shaping up? Will we see a better June quarter this time?
Yeah, asset quality seems to be stabilizing at the moment. We are quite hopeful that in about 2 quarters we should start seeing the improvement coming through in the asset quality. There are the concern that we have at the moment is around the potential restructuring proposals which could come through because of the stricter stress asset monitoring guidelines put in place by RBI. Second, also that the restructuring window is reaching a sunset position by end of this fiscal year. So there could be some level of accelerated restructuring to take advantage of the concessional provisions by RBI. So that is an area where we might have a concern, but overall NPA levels should start tapering down as the overall outlook and capital availability to our promoters improve on the back of strong liquidity as well as the capital markets. As far as the margins are concerned, we have seen improvement over the last 6 quarters consistently. I am expecting that in the next 2 quarters as well we will see an improvement as the pricing power remains with the lenders, and also the interest rates remaining stable to improving from now. We have seen some improvement in the shorter end of the curve. So I'm hopeful that there will be an improvement in the margin in the next 2 quarters.
How do you see the housing finance business growing over the next 1 or 2 years, and what's the kind of credit growth and profit contribution, more importantly, that we can expect from here?
We believe that this is a business where scale is extremely important because the margins are thin. The only way to manage the operating cost, consequently achieve acceptable level of ROE, is around the scale. So we do think that in a short while we should be around 10 to 15,000 crores of asset size. Our goal for the immediate years around building balance sheet will be driven by the need to achieve scale. So I do see that there will be a very, very robust growth in the volume. We ended the last fiscal year at about close to 2,000 crores of asset size. we can hope to see a growth well above 50% in the current year. That's what our definite objective will be. This will definitely push us towards achieving our near-term goal of about, or rather medium-term goal of achieving 15 to 20,000 crores of balance sheet. It's been making profits. I think at the moment the profit is not a major focus area because we need to expand the network. We need to build capacity within the organization. But we do believe that it will contribute decently to the overall profitability of the group.
And finally, how do you plan your future banking foray since the RBI has yet to finalize norms on differentiated licenses? Any plans to buy stake in any other bank post the recent stake sale in City Union Bank?
Well, I think our aspiration as for to become a bank does remain. As we have been maintaining, that's more a strategic approach rather than anything to do with the need to exist in a particular form. We believe that as a bank we can service larger customer base and provide them with wider scope of services. Consequently, the overall market that we can address becomes larger and will enable us to grow more faster than what we have achieved in the past. With this objective in mind, we'll continue to pursue obtaining a banking license. Now, whether it will be through organic route or an inorganic route, we'll have to wait for RBI to clarify and provide guidelines to us as to how it will look at new licenses being granted, be it differentiated or a universal banking license. We are not averse to an acquisition, but I think it will be premature to discuss about our strategy unless we have clarity on how RBI is going to approach a universal banking license. Differentiated banking license, there are no guidelines announced as yet. We would wait for RBI to make its mind clear, announce the regulations so that we can evaluate and take steps in a manner that is going to be value-adding to us.
All right, Mr. Sivaraman, we'll leave it at that, and all the best for the next 12 months. Thanks for taking the time out and joining us today. That's, of course, L&T Finance Holdings. Speaking about the next 12 months, the banking foray, or how would they go about it as well? Lots that Mr. Sivaraman shared with us. By the way, while the markets have come off the highs of the day and are flat, there are some stocks making new highs on the BSE 500. Look at agrotech foods.